You're listening to the Analysis Mason podcast with Tom Rebbeck. Today, I'm joined by Jonathan Daniel, one of our analysts. John, welcome to the podcast.
Hi, nice to be here.
John's responsible for tracking operators' financial performance and maintaining our database of financial KPIs. As we're just at the end of the reporting season, we thought it'd be interesting to discuss the performance up to the end of the third quarter. The general mood around telecoms, I think, has been fairly negative for quite a while, with even the operators talking down their results and saying how difficult the market is. But I think, John, the numbers tell a more positive story, don't they?
Yeah, the overall picture for operators is improving. So when we talk about operators in terms of their revenue, we see that the operators are growing at around 3% year on year in the 12-month period to 3Q25. This compares to around 2% in the 12-month period to 3Q 2024.
Okay. And it's probably worth saying that's the 3%, that's for the aggregate of all of the operators. So you've added up all of the revenue figures for the operators that report. There are different ways of doing it. You could look at average revenue growth and so on. So the numbers will be different, but broadly speaking, the trend is the same regardless of how we cut the numbers. So aggregate revenue growing 3% compared to about 2% a year before. So that's positive. It probably also means that in real terms, operator revenue is about flat. I think inflation is maybe slightly higher than 3%, but only a tad, which I suspect means it's the first time we've seen real terms growth or at least a flat revenue since probably before the pandemic. So yeah, it's a good performance. Now, looking at that growth, is it mostly organic or is it inorganic?
So if we do look at the largest operators, we do see a mix of organic and inorganic factors. However, in most cases, the growth has been organic. So for instance, you have Deutsche Telekom, Airtel, Verizon. All of them have grown their revenue from their operations. Though there are some cases, for example, Ian and Etisalat, they grew their revenue basically through acquisitions. So they have a very significant jump in their revenue that we see. Similarly, on the other end of the spectrum, you have Telefonica. You see Telefonica's revenue decline, but that's due to their discontinued operations in Latin America.
Yeah, so you've got a mixture of some operators buying, some operators selling, probably more or less nets itself out. So the growth we're seeing is probably mostly organic. Yeah. Let's look then at EBITDA margins. How does the improved revenue performance, how's that translating into EBITDA?
So the EBITDA margins on average increased marginally by around 1 percentage point to around 36% in the 12-month period to 3Q25. While most operators managed to improve their EBITDA margins, some operators did see a slight decline in EBITDA. So you have cases like China Mobile, KT Corp, and NTT. So these operators incurred a higher operating costs. More or less, you see, in general, most operators improved and managed their operating costs well and grew their EBITDA margins. This suggests that, the cost-cutting measures that operators have been adopting is working.
Okay, so the cost controls that operators have been introducing has been helping improve their EBITDA margins. Capex then, what's happened with Capex?
So the operators' combined capex remained flat in the 12-month period to 3Q25. This is in comparison, it declined quite drastically in the previous year. So we see that on aggregate, the growth was around 1%. This compares to around 8 to 9% decline in the 12-month period to 3Q 2024. These results do vary though by operators. So the reason we see such a significant jump is kind of driven by a few operators. So like, for example, Airtel, AT&T, Deutsche Telekom.
Yeah.
These operators are spending and investing quite a bit to improve their infrastructure or expand their infrastructure. See, you have AT&T in the USA that's trying to expand its wireless infrastructure, trying to roll out fiber. You see similarly Deutsche Telekom doing the same in Germany. However, you see that it's quite country specific. So in countries there's a better infrastructure for fiber and 5G, you do see capex declining. However, there are a few large operators that have increased their capex in this 12 months. And that is why you see a sort of flattish growth in capex.
Yeah, so it's a mixture. You see one or two, a small number of operators, they've got relatively high capex, like the ones you mentioned, because they're still like AT&T, Deutsche Telekom, lots of money, big spent on developing fiber. But for most operators, capex is continuing to fall. And like you said, for the year before, it fell really sharply, 8-9% to a big drop in capex there. Let's move on then to operating free cash flow. It's quite a useful measure, but before we talk about it, let's just say what it is.
Operating free cash flow is essentially a function of EBITDA and capex. It is a measure of operators' financial performance and can tend to be more indicative than EBITDA. So it's essentially calculated by subtracting capex from EBITDA. As telecoms is a very capital intensive industry, EBITDA tends to leave that out, while operating free cash flow has that factored in it. It's essentially the actual cash that is available for operators after maintaining and sort of growing their network.
Okay. And what are the trends in operating free cash flow?
So, as you've discussed, EBITDA has been growing faster on average compared to the average capex, which has been sort of flattish or declining in most cases. So, operating free cash flow has generally been improving, and that's what we see in this 12-month period. So, if you look at the operating free cash flow as a percentage of revenue, it increased on average by around 1 percentage point to around 22%. However, in some cases, like we discussed, say T-Mobile USA, AT&T, that sort of increased their capex in the last 12 months, you see a slight sort of decline in operating free cash flow. But in general, for most operators, this measure has been improving.
Yeah, which I guess is what we'd expect. You said before, EBITDA margins for most operators are improving. The capex, there are exceptions, but for most operators, capex is flat or falling. So that all feeds into a better operating free cash flow figure. So just to kind of wrap everything up, we've got revenue that's increasing. So that's going 3% on average year-on-year growth. So, and it's fairly well distributed across the different operators. It's not just one or two doing extremely well, but lots of operators in growing their revenue. EBITDA margins are improving, so it's telling us that operating costs are under control. Capex for most operators more or less flat, decline quite often, and it fell sharply the year before. And then finally, when you feed that into operating free cash flow, results are also improving, kind of as you'd expect. So John, that's really interesting. Just for the listeners, where can they find out more? Where do we have this information?
So all the operator financial KPI data is available on our Data Hub, which is our online database. We also publish a financial KPI tracker report, which is published every 6 months. So we cover the annual sort of figure on a financial year basis as well as on the half-yearly basis.
Okay, great. Thank you. And we'll put links to those resources in the show notes. So thank you, John.
Thank you.
And if you'd like to automatically receive future episodes, please subscribe to the Analysis Mason podcast. We also welcome comments, feedback, and reviews. Thank you for listening.